Let's stick with the theme, loosely speaking, and Davide Bosio joins us now from Shaw and Partners in Perth. David, thank you so much for joining us. Great to see you. Gold producers, considering what's happening out there today, pretty positive. Where are you placing your faith in these gold producers, all of which seem to be really struggling with rising costs?
Hey Nadine, how are you? It's an interesting space at the moment, and gold continues to baffle, I guess, the long term bullion believers. But either way, we remain we have faith in precious metals, and we continue onwards. Just looking at some of the key fundamentals, looking down from I guess the Newcrest, Northern Star Evolutions of the world, Regis, Ramelius. Those guys are all producers. They're all having their own little battles at the moment, and a lot of that is cost driven. The gold price itself, although it's failing to sort of break through that 1800 mark. It's tried a couple of times and keeps hitting that resistance level now. So we're last time I looked we were just under 1750. There's still good margin in there for those businesses, and we're looking at some of the producers and saying, well, although we've had this change in terms of the cost side of the equation, obviously diesel price has been a very large contributor to the cost equation, and also labour. Many of these companies have relatively lazy balance sheets, so they're making margin at these current gold prices. They're doing their best to remain competitive, but they also have many of them are sitting on decent cash piles and also very, very low debt. So we see that as an interesting environment where we could see some M&A. And just on that note, this week we've seen Gold Road acquire another just over 4% holding in De Grey. So they now move up to a 19.9% shareholding in De Grey, which many market commentators suggest a takeover is imminent.
Okay, so are we going to see more M&A in that space, do you think, David?
I think there's a really, really strong chance, and that's just based on the fact that many of these gold companies are trading at or below, well, they're making new lows. They're trading at 52-week lows, thereabouts. They still have fundamentally very sound businesses, and if they're sitting on large reserves in terms of their gold inventory, well, that may start to look very attractive for potential acquirers. So I think there is a very, very strong theme, given that the sector is struggling a little bit in terms of its share price performance.
Okay, so there's opportunities there potentially. What about in some of these battery materials companies? So, Pilbara, as you know, reported today, pretty positive share price reaction. It's turned profitable, but a lot of these companies in lithium and rare earths, I mean, they've had such a great run. So are they starting to look a little bit toppy, or still opportunity there as well?
Yeah, I do believe that there's still real opportunity. It's such a interesting sector, and you look at things like mineral resources, Pilbara mines, Liontown in the lithium space. They've done exceptionally well. That whole sector, that move toward battery technology isn't going away. And this is, I think, a really important theme for investors, is these markets, when you're in them and you live them every day and you're trading or investing in these stocks, it can often feel, after you've had a solid move higher, that the move has played out. But we're talking about a fundamental shift now. We're talking about a serious shift toward this battery technology, and I don't think it's going away anytime soon. So I think the hard part for investors is being able to hold your nerve, being able to stay in a position, but also understand that along this journey, if it's going to be a multi-year cycle and could go on for decades, that you're going to get peaks and troughs along the way that will shake out some investors. But again, looking for quality, if you look at things like the lithium theme, I don't think we're going to see that underlying demand story change anytime soon. And if you look at something like rare earths as well, a phenomenal move in that space. If you look at companies like Lynas, if you look at companies like Arafura, if you look at Hastings, they're all benefiting from, I guess, that uptick in sentiment toward that sector. We've seen Iluka in Western Australia. They're now moving ahead building serious infrastructure to really invest in the long-term demand for rare earths. And if you look at these markets, the key markets of lithium, rare earths, the whole world is moving away from a dependence on, China, Russia, for example, as large producers, particularly in the rare earth market. But in Western Australia alone, we represent about 60% of global lithium hard rock resources. It's significant. So we're in a terribly fortunate position here, and we are also starting to become a major force in rare earths as well. So it's an exciting time for these critical minerals.
Yeah, and David, I mean, is it pretty safe to say when you're talking quality, you're talking the producers, because you're in ground zero for explorers, in this country. And I mean, I get a lot of emails from some of these little exploration companies, and there's nothing wrong with them, and we wish them well. But I mean, is it safer, a quality bet, to be in the producers instead of some of the explorers in those, in batteries and technology and rare earths, etc.?
Yeah, as you said, we are in ground zero, and being, I'm based in Western Australia, and it's the heart of exploration, and I was recently at Diggers and Dealers, and that really cuts the core of what we do. As I guess as investors, we're all looking for that tiny junior that becomes a major, and it's sadly it's very few people ever get it in a lifetime, let alone on multiple occasions. So it's one of those aspirational goals that we look for as investors. However, I would say with all these moves, if you really have a view on a sector, you can find, and this comes down to individual risk and reward. It's great to have some serious companies in the portfolio, serious producers that are going to see a cycle through, because as we talked about in the gold space, if you're a gold junior at the moment, you're probably heavily out of favour and unloved. If you're a serious producer, you're sitting on, even though you may be unloved, you're sitting on quite a lot of cash, and you continue to make free cash flow. And that means that you've got a lot of optionality. So if you believe in a sector, and this goes across all markets. So, for example, in lithium, it's great to have a producer, something like a Pilbara at the moment, that we've seen today. They've come out with their maiden profit, very, very strong cash flow. You can see how leveraged they are to a strong lithium price. But if you do look down the curve, there are a number of potential emerging producers or advanced explorers that will give you greater leverage as well. But these all come down to, I guess, personal preference. So being a small cap investor myself, I'm never one to say, exclude the small caps and only look at the big end. But it's great to have that balance. And I do feel that, especially in difficult markets where sentiment's been poor, it's usually the large caps that move first.